Good afternoon and happy Friday, everybody. This is Danilo Bogdanovic, Realtor, licensed in Virginia with Redfin. And I come to you guys with an important update. As many of you know, the Fed met earlier this week. They had a two-day meeting on Tuesday and Wednesday, and they made their formal announcement on Wednesday, 2:30 p.m. Eastern Standard Time in regards to their take on the current economic conditions and any changes as far as what they have put into place previously. And yes, there were some important changes that are going to affect all of us and the entire economy. So long story short, they were originally at the last meeting hinting towards a couple interest rate hikes in the second half of 2022 and then some more into 2023. Well, that has changed. They are looking at an increased number of interest rate hikes this year, in 2022, and then continuing all the way through 2024 is their guesstimate, and also starting earlier. So instead of the second half of next year, looks like they might be raising them at their next meeting, which is in mid-March. Where does this come from? They're doing buybacks. They're actually taking those buybacks down to zero earlier than anticipated, and all of the experts say that, hey, before you raise interest rates, you have to finish up with the buybacks because both have the same or similar effect on the general economy. And the way that their timeline works falls right in line with their mid-March meeting as far as when the buybacks end and when they're most likely to increase the interest rates. So what does this do for the real estate market here in Northern Virginia and in general? Well, let me give you real-life examples. After the news, I spoke with several of my clients who are waiting until next year to list and some who are also waiting until next year to buy. And when I say next year, the sweet spot of the spring market is generally April and May. So that was kind of the timing for my sellers, and my buyers were looking to wait until March or April when there was more inventory on the market. Well, with the news of the interest rate hike, which will create some downward pressure on both values and demand, all but one of my sellers said, I'm going to seriously consider about listing maybe in February or early March instead of April or May. And on the buy side, several are now kind of have a sense of urgency that wasn't there before. They said, oh, well, I'll take my sweet time. If it's not till May or June, I'm totally fine with that. But now, with the interest rates potentially going up in mid-March, they are, there's more urgency. They're looking to get into something before then, or at least be under contract so their lender can lock the rate in. You get a free, basically 30-day rate lock. So others, they don't care. They said, you know what, if it goes up 0.5%, I'd rather wait for the right home, or, my kids are in school. I don't want to yank them out of school. I don't want to move until school's over. Those are huge life events that they would rather put first than to pay slightly less on the interest rate. So there is some effect already that I've seen or heard. Personally, I think that we're going to have a much busier January, February, and early March than we normally do. Usually April and May are the 2 months that realtors basically, if and when we get gray hair, that's when we get it. I think that it's going to be spread out a little bit more evenly. I think a lot of people are going to seriously consider, and many of those will list their homes earlier. Buyers will start to look earlier than normal. So I think January and February and early March are going to be much busier than they typically are. And then April, May, and June are still going to be, I think, busy, but we won't get this crazy just increase in April as we normally do. Now, I spoke with my lender after the news, Darren Anthony of Main Street Home Loans. He has been my go-to lender for 18 years in my career, and I also bought my first home before I was a realtor about 21 years ago. And he is on the money 99% of the time. And he gave a great analogy when we were talking about the effects on the market. He said, yeah, the market slowed down, but there are still pockets, here in Northern Virginia with multiple offers. Small towns across the country are still getting multiple offers because small towns are still booming. He said, imagine, asking price is $800. Well, in the previous market, or still in some areas, you would have to bid $825, $850, who knows, even more. And you'd have to go in with no home inspection, no appraisal, and no financing contingency. So imagine moving in, and he's heard this, and I have clients as well who have told me horror stories of later after they moved in, finding $10,000, $20,000, $30,000 worth of items that needed to be fixed or replaced. They went in with their eyes open. They knew the risk they were taking, and that was the risk that they ended up paying. I have one client literally who spent over $30,000, and they went $50,000 over the asking price. So that's an $80,000 swing that if the markets was slower or normal, they would have paid $800, possibly less. They would have had a home inspection. They probably wouldn't have to spend $30,000 on the fix. So that's an $80,000 swing. Now, a 0.5% interest rate, they don't plan on living there for 30 years. They plan on being there for maybe 7 to 10 years. For $80,000 out of their pocket, the inconvenience, the dust, the headaches, the anguish that they had to deal with because contractors coming in and out, there's an intangible value to that. I was speaking with them and they said they would have happily paid a higher interest rate and avoided the whole fiasco of the multiple offers, bidding above, and it actually would have made more financial sense. So when you look at the big picture, this isn't the end of the world. It doesn't mean the bottom's going to fall in the market. It just means we're going to get back to a truly balanced market. We're kind of on a level playing field between buyers and sellers. And there's nothing wrong with that. We've been spoiled with these low interest rates. Sellers have been spoiled and buyers beat up by the crazy market of 2020 and the first half of 2021. So this is actually good long term. I know that's not what sellers will want to hear, but it is, I think, the case. So another thing also to mention is that the Fed said they actually put up a projection chart, Powell, when he was speaking, and it showed that interest rates were going into 2024 and looking at about from right now it's at 0 to 0.25% is their rate right now, going as high as 3. So basically rates could go anywhere from 2 3/4, 3 where they are now, up to 6. Now 6% historically is completely normal and fine. Before my time, as far as what I can remember, but my parents, many of you, your parents or you yourselves may remember 18% interest rates on homes. So 6% is nothing, and they would have loved to have 6%. We're just spoiled at under 3. So it's not the end of the world. It'll be a balanced market. It will have some downward pressure on the market and possibly values. What will values do? I wish I could answer that question. If my crystal ball would actually finally work, I would be able to answer that and retire tomorrow. But unfortunately, it's still broken, so I can't answer that question. I think that it will have some downward pressure on pockets of areas that may have been hyperinflated even more than surrounding areas. The higher it goes up, the further it can go down and the faster it can go down. So I think we might see more downward pressure in those type of areas. I think prices may remain flat-ish the more the interest rates go up. But, are we going to have a crash of 07 or 08? The fundamentals say no. So I talked about this in a previous video. The fundamentals are still there. Now, if the general economy goes to, then that's a whole different story. And that's a whole different topic, which I could spend hours, talking about. But we'll leave that for coffee or in person, not on video. So as of right now, I'm not terribly worried about the market crashing, falling out. I think we'll see a slowdown. I think it's a good thing. I think that overall it's better for everybody. Most people that sell also buy. So what you may quote unquote lose on the sell side, you're going to gain on the buy side and vice versa. So it's not like you're just losing out and that's it. So overall, this is not a bad thing. We have until mid-March, then we're going to find out for sure. Now, keep in mind the Fed has already revised things once, and they have every right and can and may revise things again once we get more of the general economy numbers between now and mid-March. So if inflation continues to run away, it could be higher interest rate hikes than before and maybe more of them. So we'll see. We'll find out. So wanted to reach out. I know it's been a while since the last video, but this was very important news. and definitely wanted to share it with you guys and give you my take on it. If you have specific questions, as always, don't hesitate to reach out. I'm always available. Wish you all a happy holiday season. Hope you've already been having one and continue to do so. Wishing everyone a happy and healthy New Year and 2022. And I will talk to you guys soon. Thanks. Take care.